to work out with the payables as such. Okay, when we are talking how even what is the advantage you will get if you are paying early, or if you are see what is the same concept will apply with respect to the payables also. Okay, when we are talking in terms of payables, okay, when we are talking in terms of payable, they will give you 90 days credit. Okay, they will give you 90 days credit. Now if you are going to pay within 30 days, okay, 30 days, 60 days, okay, you are taking 30 days, definitely you will get some discount you will get. Okay, what is the advantage? Where we are taking the we will calculate discount for 30 days, but ultimately what will convert? We will convert this discount. Okay, we will convert this discount on a yearly basis. Okay, on a yearly basis, and how we will calculate how much you will get. Okay, now if you are paying early, it is same concept will be there. If you delay the payment, it is not going to be help us. Okay, our credibility will lose. Delaying too long may cause difficulties for the company in the long term. People will not supply us. Delaying payments to suppliers to obtain a free source of finance. Okay, if you are delaying payments to the suppliers, we'll get the what? Free source of finance. Definitely what will happen if you pay early? Okay, if you pay early, okay, if you pay early, what will happen? Your liquidity will decrease. Is it? If you pay delay, your profitability will increase. Okay, your profitability will increase. But what will happen? They will have some issues with respect to, they are having some issues with respect to long term. This is what we are talking in terms of balancing act. Okay, this is the payable. Now how we are going to balance the payments as well as the receivable. By delaying the payment, these are the reasons. See, these are the reasons where they will ask you somewhere in MCQ. Okay, suppliers may refuse if you delay the payments. Okay, if you delay the payment, suppliers will not supply. Supplier will may only, then they will say only on cash basis. You will use the reputation. The suppliers increase in future, they will increase the price. Okay, increase the price. This is the in the examination you need to able to calculate. See the thing in the examination you need to able to calculate the cost of discount foregone. How much you if you don't take the option, how much you are going to lose the discount as such. Okay, how much you are going to lose the discount. What is that is what they say. What is the cost of discount in terms of it, how it will have impact on the working capital. Okay, what is the formula is there? The benefit of discount is less cash paid to the, what is the if you are going to, the benefit of the discount is that less cash is paid to the supplier. What is the formula? 1 plus discount divided by amount led to pay, number of periods minus 1. Okay, the number of, see, when you are talking about where number of periods, okay, where number of periods, okay, number of periods, okay, 3 yearly, weekly, monthly, number of days, same rule what we have done, number of days or weeks or months to be received. Okay, number of days. Now we use, when we talk about the things, okay, what they are saying, one supplier has offered a discount of how much they offered a discount. See, discount, write down immediately. Okay, discount, how much is the discount? See, is 2%. What is the invoice amount? Invoice amount is how much? Invoice amount is discount is 2%. Invoice amount is 7,500. If the payment is made within 1 month, okay, 1 month, rather than 3 months normally taken. If is it usually if you are paying 1 month. If box overdraft rate is how much? 10% per year. It is financial worthwhile for them to accept the discount and pay early. Is it right? It will accept to discount and pay early. Is that whether whether we should accept the discount or we should not accept the discount as such. Okay, now how much is the discount? How much you are going to get the discount? Discount is 2%. Okay, discount is 2%. What is the amount is there? Amount is how much? Amount is 7,500. Is it? If you take discount amount, okay, if you take the discount amount, 7,500 times 2 by 50, 2%, okay, 2%. It comes to how much? It comes to 150. Are you clear about this? Is it? It comes to how much? 150. What they are saying? They are saying that how much you are going to, if you accept the discount, if you pay within 1 month, if you are paying in 3 months, okay, how much you are going to save? Is that we have to know how much you are going to save in if you save in 1 month, if you pay within 1 month, if you're going to pay within 3 months. Is it? Done. How much is there when we are doing the things? 1 plus discount. Okay, 1 plus discount. 1 plus discount. Okay, 1 plus discount. Is it? Done. Amount of annual benefit of discount. Okay, annual benefit of discount. 1 second. Discount is how much? 150. Okay, discount is 150. Is it right? Discount is 150. How it comes to how much? Discount is going to be 150. Fine. When discount is 150, 1 second. Is it right? When discount is 150, how much they are going to, how much discount of 2% on the invoice payment if the payment is paid within 1 month. Okay, if the payment is paid within 1 month rather than 3 months normally taken. Is it? If you are going to pay in 1 month, if you are going to pay in 1 month, if you are going to pay in 3 months. Okay. Is that if we are going to pay in 1 month? If you pay in 1 month, what you have to do? You will take is it right? You will borrow and you will pay. Okay. If you are going to pay in 1 month, if you pay in 3 months, no overdraft. Is it right? If you are paying in 3 months, there is no overdraft. Okay, there is no overdraft. Okay, there is no overdraft. If there is no overdraft, what will happen? You are going to interest saved. Okay, you will save the interest. Okay, you will save the interest. How much you are going to save the interest? Is it 7,500? Okay, 7,500. How much is the rate of interest? 10%. Okay, rate of interest 10%. How many months? 3 by 12. Okay, 3 by 12. If you are no overdraft, if you are not taking the overdraft, you will save the interest. How much you are going to save the interest? 7,500 times 0.1 times 3 divided by 12. It comes to how much? It comes to 187.5. This much amount you will save if you are not taking overdraft. If you pay within 3 months, okay? If you pay within 3 months. If you are not paying, if you are accepting it, is it right? If you are accepting it, is that how much we are paying within 1 month? Okay, how much you are going to pay? You are going to pay if the payment is made within 1 month. Okay, within month. How much is the amount? How much is the amount? Amount is going to be 7,500. How much you are going to receive discount? You are receiving discount of 150. Okay, you are receiving discount of 150. You are paying within 1 month. Okay, 1 by 12. Now what happens? 7,500 minus 150 net amount you will take. Okay, that much you are going to pay. Okay, at the rate of how much? At the rate of 10%. And you are paying where? You are paying within 1 month. Okay, we are paying within 1 month. When you are going to pay within 1 month, 1 by 12. How much is there? Tell me please. How much you will get? 7,500 minus 150, okay, times 0.1, okay, divided by 12, okay. It comes to how much? It comes to 61.25. Are you clear about this? Is it right? See the thing. If you are not taking the discount, you will not take the overdraft. If you are taking the discount, you have to pay in 1 month. Now, how much discount is there? See the thing. This is what we call it as a. This is called it as a interest. Okay. This is what we are going to pay. How much? This is what we are paying as a interest. How much is the interest? Interest is how much? Interest is 61.25. Now, we have to make a very, very calculative decision, okay? We have to, whether we should, what is the amount we are going to work it on. If we are taking the 1 month discount facility, how much you will receive discount? How much you are going to receive discount? We will receive discount is how much? We are receiving the discount is how much? You receive the discount of 150. How much you are going to pay interest? Is that how much you are going to pay interest? 61.25. Okay, 61.25. How much is the difference you will get? You will get 1 second. 1 second. 1 second. 1 second. Okay. Now see the thing. 1 minute. See, if we are not taking overdraft, is it right? If you are not taking overdraft, how much you are going to save? 187.5. Okay, 187.5. If you are taking a overdraft, okay, if you are paying within month, what is the interest cost? Interest cost is 61.25. Interest cost is how much? 61.25. Now, what we have to take? We have to identify how much we are going to have the savings. Is it right? How much we forego the savings? Is it right? Now, how much if 3 months overdraft? Is that 3 months overdraft? Okay, 3 months overdraft. 3 months overdraft. How much is the savings? Is it right? How much is the savings? Savings is going to be 187.5. Okay. Payment within 1 month. Okay, 1 month payment. Okay, within 1 month payment. How much is the cost? Interest cost is how much? Interest cost is 61.25. Is that interest cost is how much? 61.25. Is it right? We will, what is happening if we don't pay, okay, we don't pay within 1 month. What is the difference you will get here? 187.5 minus 61.25. Okay, it comes to how much? 126.25. Is it one? See, if we pay within 1 month, okay, if you pay within 1 month, we are losing the benefit, okay. If you pay within 3 months, okay, if we pay, listen carefully, if we are paying within 3 months, how much you are going to save? We are going to save 187. If you pay within 1 month, how much is the interest cost? 61.25. Now, which is it feasible to you to pay within 3 months or 1 month? Which one? Which
3
one you
months.
will prefer?
3 months.
Yes, yes. It is going to. We are going to say. We are going to prefer 3 months. Okay, because we are going to save it. Is it right? If you pay, is it right? If we pay, if paid, is it right? Within 1 month. Okay, if paid within 1 month, is it? How much is the savings will be lost? Savings will be lost how much? Savings will be lost by 126.25. Okay, savings will be lost by 126.25. This much savings you will lose if you are paying within 1 month. Okay, if you are paying within 1 month. Are you clear about this? Next, what's happening? What's happening now? Is that what is the net savings you are going to take if you pay within 1 month? How much is the saving lost? 126. But if you pay within 1 month, okay, again I'm saying, keep it in mind. If paid within 1 month, is it right? If you pay within 1 month, how much is the discount received? Discount going to be received is how much? Discount is going to be received by 150. Is that you are receiving the discount of 150. If paid, is it right? If paid within 1 month, is it right? If paid within 1 month, how much is the savings is lost? Savings is lost is how much? Savings is lost is how much? 126.25. Is it right? 126.25. How much is the difference? 0.75 and 23. Are you clear about this? This is the net savings. See the thing, very, in a very short way, I will explain you in a quicker way. If you are going to pay within 3 months, 187, okay, 187, you will not take in the overdraft, you will save money. If you pay within 1 month, there is an interest cost of 61.25. Is it? What is the net difference between the interest saved and interest paid? Interest saved and interest paid is 126. Okay, this is a interest saved and interest paid is 1. If you pay within 1 month, you are losing, you are not gaining. Is that if you are paying within 1 month, that is the reason most of the people will not take the discounts, because when you take the discounts, what will happen? Your liquidity will decrease and your profitability will have impacted. If you are going to pay within 1 month, the discount is how much? 125. If you pay within 1 month, how much you are going to lose savings? 126.25. The net savings is how much? 123.7. Is that? This is one of the way of doing the things. Next, I will give you with respect to the, I will also, is it right? I will give you with respect to the another short method as per the formula. Okay, as per the formula, we will do. How much is the discount we are going to get? Is it right? How much is the discount we are going to get? See the thing. How much is the discount in terms of discount is how much? Discount in terms of percentage. Okay, we are getting a discount of 150. Okay, we are getting a discount of 150. Is that? Now I will put a formula here. Discount amount, okay, discount amount divided by net receivables. Is that? Discount amount divided by net receivables. Okay, discount amount divided by net receivables times 100. Okay, that is the discount percentage. Okay, discount percentage. Discount amount is how much? 150 divided by net receivables are how much? Net receivables are 7,350 times 100. It comes to how much?
Is this receivable or payable?
Sorry, sir. Sorry, sir. This is payables. This is payable. Sorry. Thank you. Okay, payables. Okay, discount amount, discount receipt is how much? 750. Net payables is how much? 7,350. Okay, net payables is how much? 7,000 times. How much is there? 2.04. Are you clear about this?
Yes.
Okay, are you clear about this? Now we are doing in other way. The result will be same. Okay. Now how much you are going to save? And how much you are going to save? How many months you are going to save? Saving is we are paying within 2 months. Okay, we are paying within 1 month. Is it that savings will be how much? Savings in terms of months. Okay. 3 minus 1. How many months? 2 months. Is it right? Savings. Is that savings is 2. If it is 2 months, how many periods? 12 by 2, it comes to 6 periods. Is that 12 by 2, it comes to how much? 6 periods. Okay, they say number of periods. Is that number of periods is now. You do the thing. You substitute this formula. 1 plus. Okay, 1 plus. How much is there? 1 plus 1 second. Amount let to pay. Okay, I will not discount divided by amount let to pay. You should not get confused. Okay, amount let to pay. Okay, 1 plus. Okay, 1 plus. How much is there? 0.0204. Okay, 0.0204. Okay, how much number of periods are how much? Number of periods is 6. Okay, number of period is 6. 6 minus 1. How much you will get? How much?
88.
0.1288 or 12.88%. Is that or 12.88%? Now you see the thing. What they say that if you take overdraft, okay, if you take overdraft, what is the percentage? 10%. Is it right? If you take the overdraft, how much is it? It is 10%. If you take the discount, okay, if you take the discount, how much is the cost? If you take the discount accepted, okay, discount accepted, 12.88. 12.88. Which one you will take?
Overdraft.
Overdraft. Okay. Overdraft is more economical. Is it? Overdraft is more economical. See, there are two ways. Is it right? Now, once we are doing this, is it right? As per the annual benefit of the discount. Okay, what is the annual benefit of the discount? Annual benefit of the discount is 12.8. It is better. Okay, it is better to take the overdraft. Is it? It is better to take the overdraft. Now, see, there are two different options are there. Okay, there are two different options are there. In the first case, In the first case, is it right? It is better. Overdraft is more economical. Okay, overdraft is more economical. If you are going to take the other aspect, what will happen? There is, if you pay within 1 month, is it right? If you pay within 1 month, savings is going to be how much? 23.4. Is that they will ask us very clearly. Okay, they will ask us very clearly, either in terms of percentage or in terms of amount. If they say in terms of percentage, we have to take the formula. Okay, annual benefit of discount in terms of percentage. They will mention clearly. If they say in terms of amount, we have to take the second. Very clearly, no confusion. Is it clear to you?
Yeah, it's clear.
Okay. Now, what they say that work out the equivalent annual cost. Okay, equivalent annual cost. Question will be there. Equivalent annual cost. I am putting like this again. Is that equivalent annual cost? Equivalent EAC. Okay, equivalent annual cost of the following credit terms: 1.75 discount for payment within 3 weeks. Full payment must be made within 8 weeks of the invoice date. Assume there are how many weeks are there? 50 weeks in a year. How many weeks are there? 50 weeks are there in a year. Now, first what we have to do, we have to take how much is the discount. Okay, how much is the discount? They say that discount is available how much? 1.75%. Is that 1.75%? Okay, 1.75% means 1.75% take 100. Okay, you take 100. Now what we have to do? We have to make it very clear. Okay, 1 second. Is that we have to make it very clear. Is that first what you have to do? Is that first we have to take what is the amount. I will put it as a step 1. Okay, test your understanding. Test your understanding 6. Step 1. Okay, that what is the discount amount? Discount amount. Okay, discount amount is going to be how much? 1.75%, or if you take into currency, it will be 1.75. Is it right? If you take into currency, it will be 1.75. Okay, 1 point. We have to take the discount percentage. We have to take. Now, what is the net payables? Okay, what is the net payables? Net payables will be 100 minus 1.75. It comes to 98.25. Is right? It is come to 98.25. Okay. Now, what is the discount percentage? We take into consideration what is the discount percentage. Discount percentage is 1.75 divided by 98.25 times 100. It comes to how much? 1.75, 98.25 times 100. It comes to.
So,
It comes to. It comes to 0.0178 or 1.78%. Okay, 1.78%. They are saying that within 3 weeks. They are talking in terms of what? Within 3 weeks. Okay, within 3 weeks. Okay, within 3 weeks. Within 3 weeks. Okay, alternatively, full payment must be made within 8 weeks of the invoice date. Assuming how many are they? They are going to be 50 weeks in a year. Is that 50 weeks? Now, how if we take the thing. Step 2, okay? How much we are saying we have weeks available. How much? Weeks available is 8 weeks, okay? Now, within how many weeks we are paying? We are paying within paid
3
with
weeks.
3 weeks, okay? Within 3 weeks. How much we are going to save? We are going to save 5 weeks, okay? We are going to save 5 weeks. Now, what is the number of periods? Number of periods is equal to
50.
this. How many weeks are there? 50 weeks. Okay, 50 weeks divided by 5 weeks. Okay, it is how many periods are there? 10 periods. Okay, how many periods are there? 10 periods. Okay, moment they will do practice, it will be easy for us. That's all. That is the only thing. Is it right? Now, what is the equivalent annual cost? Equivalent annual cost is how much? Equivalent annual cost. Somewhere they have given the formula for this. Check. They should have given. We have done somewhere. I think so. Equivalent annual cost. Equivalent annual cost. Have we done before? We have done before. I know.
It's in chapter 7.
Chapter 7. What is the formula, dear?
I didn't remember.
Okay. What is chapter 7? If there is a thing, is it right? If there is a thing, just okay. 1 second. Where is that? Okay, equivalent annual. I will write here. I will write here. Okay. If see in the group you can paste, you can post it. Okay, just even it is there with me. I will post equivalent annual cost equal to 1 plus R to the power of number of periods. Okay, 1 plus, this is a standard formula. Okay, 1 plus R to the power, what is the periods? Okay, N is nothing but the periods. Okay, minus 1. Okay, minus 1. How much is 1 plus R? We have calculated 1.0178 to the power of how many periods are there? 10 periods. Minus 1. It comes to how much? .0178, okay, to the power of 10 equal to minus 1. It comes to how much? 0.1929 or 19.28%. All the formulas. Okay, see, I am telling you this. I am giving you all the formulas right on a one separate page, A4 size. You take two or three A4 size pages. I am telling you this. Okay, you do it. Is that otherwise for every you take chapter 1. Okay, chapter 1. What are the formulas? Chapter 2. What are the formulas? Every separately keep one A4 size paper for that. You write the things. Okay, you write equivalent annual cost 1 plus R to the power of N minus 1. Now you will not find any difficulty when you are going to solve the questions as such. Okay, make it a practice. This will help you. Okay, if you are going to say that this is in the chapter 7, put chapter 7. Okay, if you are having the things, page number also. Is that you should see why when preparing this, if you do like this, you will working very smart. You are not working hard. Okay, this is the technique, so that you will not waste. We will not waste time when you are doing the things. Are you clear about this? Is it okay? Now what we have done?
Yes.
We have taken the discount amount. Okay, you take these two things. Okay, we have taken the discount amount. net payables, we have calculated discount percentage, we have taken the weeks, how much we have been saved, then we calculated number of weeks, 10 periods, is it right? Then we have computed the formula of equivalent annual cost. Is it right? If you take this one also, this is also equivalent annual cost only. Yes or no?
Yeah, same formula.
Same formula. Is it right? This is also equivalent annual cost. See, 1 plus, okay, 1 plus. We have calculated discount divided on 1 paid. How much you got it? 0.0178, okay, to the power of 10 minus 1. Yes or no? Here they have mentioned annual benefit. Is it right? They have said annual benefit of discount. In other words, they say annual equivalent annual cost. So now you can understand, depending on the situation, you should work out how it is going to be different. Okay, how it is going to be different. Are you clear about this? Take your time. Take the picture. See, I am very much concerned about this. Okay, take the picture and send me what you are writing. I am only concerned about this. If you are writing, our task is going to be easy. Take the picture and send me. Test your understanding 6. Okay, now fine. Now I am going to send the question numbers, which I am going to do it on Saturday. Okay, I will send you the question numbers. That these question numbers I am going to do section A, section B, section C, so that we will do only those questions which we have covered in our syllabus. Okay, we covered in our syllabus. I will send you today only. I will send you the question numbers. That these are the question numbers. We are going to do it on Saturday. Coming back to this, is it that this is the payables? When you are talking about the payables under trade credit, okay, wherever they have given you in the bold letters, keep it in mind. These are the important terms. Wherever they are given you bold letters, a firm is able to obtain goods from the supplier without immediate payment. The supplier accepting that the firm will pay at a later date. It is called as a trade credit. This they will use somewhere in MCQ. Okay, wherever there is a bold letter, 100%, you have to be very cautious on that. Is that definitely trade credit? What is that trade credit? Again, I am repeating. You are obtaining goods from the supplier without payment. The supplier accepting the firm and they will pay on a late. That is a trade credit. It from the industry to industry, company to company. Is that some duration will be different. That is not our concern. Okay, that is not our concern. They are talking about the way, they are talking about the things. They are talking about another thing. A proportion of firm suppliers will normally offer early settlement discounts. If you are going to pay within 30 days, well before 90 days, is it right? Then what they will do? They will give you some early settlement discounts. For what? For prompt payment within specified terms. Is that within specified terms? Now they are talking about various things. Okay, I'm just focusing on favorable credit terms are one of several factors, which is choice of the supplier. Trade credit may be seen as a source of free credit. There will be cost associated extending credit beyond the norm. Is that where, see what happens if you take now as simple as this, okay? Why hypermarkets, okay? Why hypermarkets are doing business, huge business, is it right? They are doing huge business. they will give us discounts also. Okay, they will give us discounts also. The huge offers will be there. Discounts are there, offers will there, because they are getting the credit for 90 days. Understand what? You supply to them. I'm not naming the firm. I'm not naming the business. You supply to big hypermarkets. Okay. Automatically they will say this is that they will put this is the supply date. Is it? This is the supply date. Supply date is going to be 5th of April. Okay. They will take 90 days. April, May, June, July. Okay. On 4th of July. Okay. On 4th of July, I'm just taking 90 days are there. Automatically, your amount will be transferred to your bank. Guaranteed. There is no plus, there is no minus. Is that now you are getting a 90 days? What you are getting? They are getting 90 days free credit. Is that they are getting 90 days free credit. Now you can understand why they are offering discounts, why they are giving so many offers, because they are getting the credit for 90 days. Okay, they are getting the credit for 90 days. This is the concept of payments. Account receivable, managing foreign trade, how you will do the foreign trade. We will cover this in chapter 13 and 14, something with respect to risk management. Okay, you have export credit risk. Is that collecting payments from foreign customers? It's not so easy. Is that if you are anybody working in finance departments of the banks anyway, is that in the business also you have the trade finance. Okay, trade finance. You have the trade finance locally, you have the trade finance internationally. Is that you have the trade finance internationally? Is it that definitely you have to collect it from foreign customers, receivement and payments both. Is that foreign? There is a foreign exchange risk, currency risk will be there. Is that there will be a currency risk will be there. There will be a settlement risk will be there. Okay, there will be a currency risk will be there. There will be a settlement risk will be there. So we have, I told you just now, we are going to cover in chapter 13 in detail. Okay, chapter 13 in detail. Is that they are giving you some more information. Risk of overseas. There is a risk if you are, see, people are now what happening, people are importing. Lot of the people import from China. Okay, there is a risk is there. But in spite of the risk, what is happening? Now the system is very advanced. Okay, very advanced. You will get involved banks. You will get involved with respect to insurance. Okay, you get involved with the banks, insurance. You have to do the payments through bank only. Means when you are doing the payments through the banks, it will be secured. Okay, it will be secured. We are reducing the risk asset. All the basic principles and techniques discussed apply equally. You will have, is it right? What are the things they will be? We are going to manage export credit risk, foreign exchange risk. Is it right? We are talking about a bankruptcy or failure of the bank in the remittance chain. Is that if see that will not happen? Okay, very simple. This will not happen. But they are giving you options. If the bank is not going to pay, there is a bankruptcy or failure of a bank. Okay. Poorly specified remittance channels. Is that people are very clear. Is that now people are doing business with PayPal. Okay, people are doing business with PayPal. People are doing business with respect to online payments. Okay, they say Visa and MasterCard. You will have, if you take into consideration the businesses, you will come across business cards will be there, online payments will be there, guaranteed payments will be there, so that there will not be any default. In sometimes what will happen, you have to pay in advance. Okay, you have to pay in advance, then only they will be delivered. Okay, there is a concept of a political risk. Okay, political risk. See what's happening nowadays. Is it right? I will tell you this very clearly. Nowadays, with respect to US tariffs are there. People are very in a panic mode. Is it right? They are in a panic mode. It is nothing but a political risk. Okay? You are having tariffs. Okay? You are having tariffs. And how these tariffs will affect it, business will affect it. People are very much concerned that there will be some recession will be there. All these things will be there. Is that people are in a very cost will increase. If you are doing that, it will be a political risk. Exporters can protect themselves. Is it a, you are using the banks in both the countries. Everything will be done through banks, okay? Your bank and the other bank. Is that commit the customer through international letter of credit, LC. If you do in locally, we use the word LC. If you are doing in globally, you will use ILC. Okay, international letter of credit. Is it internet that gives you what it will give you? Effectively, it will be guaranteed. Is it? It effectively it will be guaranteed. Take out the, we will covering the credit risk as such. Okay, they are talking about how the things. Read this one. Okay, read this one. It makes sense. It is all the reading material. Okay, it is all the reading material. We will say that we are going to cover all these things somewhere. Foreign exchange, transactions, exposure. Somewhere we will cover in detail in chapter 13. Okay, management of receivables. It is not only payables, it is also receivables. Is it a? Now, in receivables, these are important terms. Is it? These are important. What is forfeiting? Forfeiting involves the purchase of foreign accounts receivables from the seller by a forfeiter. A mediator will be there. Is there a middle person? What the forfeiter will take all the credit risk. Is it right? Risk from the transaction. Is it right? Rather, there are two things are there. Is that there are two things are there. There is a without recourse. Okay, with recourse. Okay, without recourse means you are, see, very simple. What is forfeiting? I will tell you like this. Okay, you are going to receive. You will have $10,000. Okay, you have 10,000. You will receive this $10,000 on 1st of August. Is that today? It is the 15th of April. What you will do? You will go to the bank. Okay, you will go to the forfeiting. Banks will offer these services. Okay, banks will offer these services. You go to the bank and say that I am going to give 10,000. Bank will take the responsibility. Bank will give you how much? Bank will give you how much? 9,900. Is it 9,900? Bank will take 100. Okay, bank will take 100, minimum 100. Is it? Now bank will. Now what will happen when it is going to be received? Bank will collect that received on behalf of you, 10,000. This is called as a forfeiting. Is it? This is called as forfeit. This is otherwise called as a factoring also. Okay, in a different ways. Okay, this is what it says. Is a forfeiting is usually applied for large receivables amount. Is that and is also a major convertible currencies. What will happen? You are receiving dollars. You are receiving dollars. As it is against what? Assume you are taking against the sterlings, or against you are talking about the Omani riyals. That the difference will be there. Is that the difference in currency will be there? One currency will become depreciate, one currency will become appreciate. Then what will happen? There will be a loss will be there, translation loss is there. All these things we have to manage. Now what the bank will take risk? The fact forfeiting, bank will take the risk, or the agency will take the risk, and they will take from you 10,000, they will pay you 9,900 at the time of the maturity settlement. Bank will collect on behalf of you, and for that bank will charge some charges. Is it? Bank will charge some. I am putting it a star. Definitely we are going to cover it in the somewhere in calculations or somewhere in the theoretical one. You have the LCs, letter of credit. Okay, you have the,
Doctor,
yes.
can we say factoring for local and for forfeiting is for foreign accounts? That the difference between them?
Here that's what they say now. Forfeiting involves purchase of foreign account receivables.
Only this is the difference between these two terms.
Both are same. Okay, one is for, that is the reason I put here what? I put here dollar, I put here sterling. Is it right? Forfeiting and factoring. Forfeiting and factoring. Factoring, and yes, you can put it as a, that is for the local and this is for the foreign currencies. Okay, this is for the foreign currencies. Okay, that is the reason I have mentioned, when I am mentioning, I have mentioned it very clearly that you are taking the dollars and you are converting into Omani riyals.
Okay, clear.
Okay. Now, if there is something is there, I will tell you in due course. There is a with recourse and without non-recourse. Okay, without recourse and without recourse. It is a, when you say it is non-recourse, make this an attractive arrangement for businesses. As a result, the cost of forfeiting is high. Non-recourse means what? If the counterparty is not paying. Is that if counterparty, the forfeiter will take the responsibility. Then they will not, if it is secured, it is only 100. If it is not secured, they will charge high. Okay, they will charge a higher amount. Okay, they will charge a high. It's nothing but they will take into consideration the risk factor. Is it? They will take into consideration the risk factor. See, I will putting this in green because I will cover this in some more detail at a later stage. Okay? Fine. Are you clear about this? Okay? Next. Coming back to the things, okay, you have the LCs, is the letter of credit, okay, letter of credit, both parties set the terms for goods and services, you have the importer, you have the exporter, is it? This is further way of reducing the investment in foreign accounts, receivables, and give business a risk-free method of securing payments for goods and services. Okay, it is, see, we are, when we are talking about letter of credit, it is giving you a guarantee. Okay, it is giving an asset. The bank then issues a banker's acceptance. Is it? The bank will issue a banker's acceptance, and based on that, the further transactions, collection of letter of conduct depends on the conditions in the letter. Only occurs if the seller presents exactly the document stated in the conditions. Is it? Set in the conditions. Is it? Goods has been sent by air, but the letter of credit stated shipping documents were, means you have to provide the documents as with the things. Okay, that is the letter of, okay, little bit make it a point. They will just have a look on this. Okay, don't miss the things. Is it right? Don't miss that. You have a counter trading. Okay, counter trading is nothing but our exchange other goods instead of cash. Is that? It is one of the old business. It is not now. Okay, it is one of the old business. In counter trade arrangement, goods are exchanged in the and other goods are sold instead of cash. Okay, instead of it, that it facilitates conversion foreign currency. Business enter foreign market that it may not otherwise be able to. Okay, that is not as to the only thing is to avoid the foreign currency. Export credit insurance protects the business against the risk of non-payment by a foreign customer. Is that when I'm underlying it and when I'm underlining it and when I'm highlighting it, make it a point. Don't miss these things. Even one mark is important. Take my word. Is it right? There is a 49 and there is a 50. 50, you get 50, you get 90, both are same. But if unfortunately somebody will get 49, it makes a lot of difference. You are putting the efforts, even a small thing we should not miss. Okay, even a small, we have to be very clear. Is that export credit insurance helps reduce the risk of non-payment. Is that credit insurance? Is it like a car insurance? We have the credit insurance. Export factoring. Is that the same thing? Is that an export factor provide the same functions for foreign account receivables as factor covering the domestic accounts receivable? It will help, therefore, it can help with the cash flow of the business. Is that it helps with the cash flow of the business. Other considered purchaser may be able to get local bank to guarantee payments to the exporter. Is that if you are dealing with, see, nowadays most of the companies are doing this. Is that all imports and exports? Is that you take companies, you take banks, they're all talking about imports and exports. Means what are the various options will be there with respect to receivables and payables, not only in local currency but also in the foreign currency. None of the methods detail about allowing the selling company to escape from that credit should only be given to customers who are, means you have to give the credit only to the people who are credit worthy people. Okay, now I am telling you this again and again, you are not responding. Okay, you people are not responding. I want this, my dear. I want this. All multiple choice questions from chapter 1. Okay, from chapter 1 till we have covered chapter 9. I want this. I want this week, Wednesday is class, Thursday, Friday. I want for chapter 1 and chapter 2. This you have to send me by Saturday. Saturday you have to send me 1 and 2. Are you clear about this?